Hi, this is Hyperwave. I am Leah Wald and here with Ty. Sorry that this is at 9:30 p.m. rather than a.m., but at least we are on. So we are going to do the quick look at Bitcoin. My tech is not so set up so much, so I am going to quickly actually turn this over to Ty, and this will be a fun one.
Great. Thank you very much, Leah. We'll go through this very quickly. Not very much has happened since yesterday, but I think there's a couple of interesting things to talk about. So I'm going to go right to screen share. And what we're looking at here is no prices, but this is the weekly Consensio configuration, where all you're looking at are three moving averages. And you can tell a lot from this, and then we'll put the prices back on, and then we'll look at the prices over various time periods. But we've had a bunch of questions about why do I use the 2 week, the 7 week, and the 30 week. And the answer is because Bitcoin and most cryptocurrencies act a little bit differently than a lot of other asset classes. And that's number one. Number two is that the basic 14, 50, and 200-day moving average, 14-day, 50-day, and 200-day moving averages, almost everybody uses those. And a lot of technical systems are based on that, like the RSI. The RSI by Wells Wilder Jr. uses a 14-day period, which means that if everybody's using them, people will be buying and selling off of those signals at the same time. So I like to vary my moving averages slightly, and that's about all I'm doing. A 2-week moving average is very similar to a 14-day. It's not exactly the same for a couple of reasons, but it's close. The 7-week moving average is 49 days approximately. So that's close to the 14, close to the 50. And the 30-week moving average that I use is not really very close, but it's not that far off from the 200-day. So the 30-week is like 210 days, but that little variation I have seen helps to keep you slightly different than the crowd using the standard numbers. So anyway, you're looking at a 2, a 70, excuse me, a 2, a 7, and a 30. And what you see is the long term, which is the 30, is still going up. And it had a big acceleration here from December through February, and now a slighter acceleration between February and April. And now here in April and May going into June, it's flattening out pretty quickly. And it will flatten out a lot more quickly as each week goes on, and then it will begin to drop. So we need to get the price above 10,100 approximately fairly quickly, or all these moving averages will be moving down. You'll also notice that on the 7-week, the 7-week has been dropping for some time. It cut through the 50-week back on March the 25th, is trying to come up with that move that we had in price up to 10,000, but now you can see it is actually moving down. And you can also see the short term has cut through the longer term moving average here, couldn't make it back up here, now is cut through the intermediate term. It is bouncing a little bit because for the past number of periods, we have been going up slightly. So now I will superimpose the price, but I always like to look at what the big indicators are doing even without the price. And so now we'll put the price on top of it. And what you see is what you would expect, movement down to the long-term moving average, back up from it, breaking down through it, trying to get above it and failing, and now dropping back away from it. So this is in a negative position, intermediate and long-term. The long-term moving average in this case is not giving a signal yet, but the price action relative to it is, which is more important. We might have one more shot at going up there. We will talk about that in just a minute. Let's take a look at one other view, which is this one using the Fibonacci numbers. We brought it up yesterday. I didn't have time to really get into it, but remember my discussion yesterday with the two parallel lines at 10,100 and 11,100. This 50% Fibonacci is at 10,177, right in between my valley of death lines, and it supported the price coming down for 3 weeks, and on the third week it broke. Then it resisted the price going back up through it 4 weeks in a row. We did get back through it, but we weren't able to maintain that. And then we fell all the way back to the low closes, not the low wick, which was here, but the low closes, and tried one more time to get above the Fibonacci 50% line and did not do it. We have now dropping below this 61.8% line, which is at 79.36. And we have been below that now, and we are in our third week with just a couple days more to see if it's going to be able to do that. If not, it opens up the probability of dropping down to the lower 78.6 number, which is at 47.46. Very close to my intermediate target, very close to Tone's ultimate target. And we'll just have to wait and see what happens there. So now back to the price action. We won't look at all the time frames, but let's go to the daily. Leaving the moving averages on, you can see how the daily prices are moving for the last 10 days right up the intermediate term line, and holding above it day after day after day, walking up and trying to get back up to the longer term, which is at 7,920. So at this point, because this long term, and remember we're talking days now, we just looked at weeks, on the daily chart with 2 days, 7 days, and 30 days on these moving averages. Let's take the price away again so you can really see what's happening with the overall momentum. And the overall momentum is down. There's just no way to argue that. We do have a bounce in the intermediate and the shorter term one, but that is below a declining long-term average. And until these two lines can cut back through that, which they will not be able to do unless you get the price of Bitcoin moving above that line first. The price will be the first to get above the 30-day moving average, and then the intermediate and the short term will follow it. So I am still neutral on the short term, and I wanted to take a second to talk about that. We still have questions about that. I made the comment yesterday, and I think the day before, that I am looking on the short term for the next movement of days. And it's very difficult. We're looking at a daily chart. It's very difficult to say that this is in anything other than a sideways trend for the last 1, 2, 3, 4, 5, 6 days. For this period of time, we were in a short-term uptrend, and therefore the short-term moving average was moving up. And I went neutral because of that. It had been moving down. I thought it had reached my target, which was 7,400, moved sideways with slightly higher highs that we've talked about over and over again. But by the end of each of those, we had prices coming back down. So I made the comment that I'm looking for the next 5% move, either up or down, to change out of a neutral position on the short term. And 2 or 3 people have asked, why did I pick that number 5%? 5% of 7,000 is $350. 5% of 8,000 is $400. And those are not very big moves. But that's all I'm looking for on the short term. Once I've got evidence that some of the short-term configurations are either getting stronger or getting weaker, so that I can reliably call a 5% move either up or down, I will make that switch. I came close to making it to the upside, but we are still resisting any move. I think we could get up to 8,000, but now you see on this daily chart, the 30-day moving average moving down so sharply, it is now below 8,000. So I am resisting going positive on the short term. And of course, I'm nowhere near doing that on the intermediate term or the long term. So let's just go to the 4-hour, and we will take the price off again, which is a very good way of starting your analysis of a chart. And to me, looking at this, I can go all the way back to June 3rd and say this is neutral, because it's not moving. It's moving between 7,500 and 7,700. I got out of my negative position when we hit the $7,400 number, and I went neutral. We did drop down as low as 7,000 after that, but then we got right back into this trading range. So far, neutral is the right place to be in my mind, looking for a 5% move either up or down. I mentioned yesterday that Leah has been working on a project that we will spend an hour or an hour and a half doing a show, which is Consensio on the short term, going back for the last 2.5 months. I've looked at it and I've come to the conclusion that we have hit 8 out of 10 of those calls, and they were for more than 5% in each case. But we're going to give you the exact numbers, and we will go through each of those trades off of my Twitter feeds on a program in the next couple of days. Okay, so that's where we are. Right now, we're trading at 76.75, and this is a 30-minute chart. And you can see that going back, we'll put the price back up throughout this entire period, which is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. It's a full day's action. And in a full day, we have basically gone from 74.82 to 76.97. Flat, absolutely flat. No buying, no selling. Take a look at the volume. When we get these down bars, we get a little volume coming in. When we get these up bars, we get a little volume coming in. But this thing is asleep. Okay, back to the weekly chart. Take off the moving average. And let's start looking at some other things. Bollinger Band, we've talked about it over and over again. This is in a negative configuration until we either break through the midline or we break through the lower line, which could give us a buy signal. The lower line is now coming in at 6,005. And I think that would be a place that if I go negative on my short term, I would probably have a target down here at this bottom line on the short term, which would be more than a 5% move, but I think that's the next logical place. There are 3 bars here on the weekly that will show some support around the $6,600 to $6,500 level. And we could pause there. Maybe that will be my short-term initial target, but eventually on the short term anyway, I'll be looking to break through this 6,000 level on the bottom. Okay, I'm going to take the Bollinger off. It hasn't changed in weeks and really won't until price breaks either above this line or below this line. And then if it does either of those things, we will discuss it. Our stop and reverse, you've got to start using this if you haven't. You can step back and look at a very long period of time. In this case, we're looking almost a year with only 2 trades, a buy and a sell, and we're still on the sell. Okay, let's take these off. Let's go to the RSI. You would not imagine that the RSI on the weekly basis is doing anything because price isn't doing anything, and the RSI down here is not doing anything. The worst thing it can do is drift up, which it has been doing for the last 3 weeks, only because that means that when it does break back down, it's got further to fall, which means the price is going to have to fall fast and hard. So far, it's just going sideways. It still is not oversold. This might be one of the very, very, very few times that after all these overbought readings, that this does not go down to an oversold. If we go down and we test the Hyperwave Phase 2 line, this will become oversold down below 5,000. If we don't, and we get some strength in this market, and we get back up to 10,000, 10,100, get through the valley of death at 11,100, take out the old swing high at 11,750. At that point, I will be talking about the possibility that Hyperwave is not going to have to test the Phase 2 line, that the Phase 2 line will have held at 5,900 back previously. And we will talk about that if that would occur. I would put the odds on that at less than 1 in 10. I think there's a 90% chance that we are going to see the Hyperwave Phase 2 line touch it, maybe numerous times. Hopefully it doesn't break, and we can start a funky new Hyperwave off of that level. I put that at about a 90% from where we are today. And then I also put the possibility of that line holding at only about 25%, 1 in 4. and 3 out of 4 that it will break and we will go back down to 1,000, completing this hyperwave and getting set up for the next one, which hopefully would follow close behind. But there are no guarantees, obviously, of number one, another hyperwave coming along, and number two, it happening in a short period of time. The longer it takes us to get down that low, that is typical of a phase 7 drop off of this kind of a exponential move up. So it could take months. It could take a lot longer than that. And I'm not going to guess which it's going to be at this point, particularly after all this sideways action. This is all called an indecision pattern. And even though it's got a pretty big range from 6,000 up to 10,000, approximately 11,000, that's a fairly big range. But when you visually look at it, you can see that it's getting tighter and tighter, flatter and flatter. And that's basically what I've been saying with all of these technical indicators. We'll take that off and take a look at the MACD. MACD is still negative on the weekly time chart. The last 6 weeks have basically made no progress up or down. We've got parallel lines running here, not getting closer to each other, not getting further from each other, and that's because of the flattening of the price itself. Okay. I think that's enough for today. If there are, I'm going to turn it back over to Leah and see if we've got any quick questions we can take a look at. If not, we will bid thee adieu.
All right. Oh, I have feedback. Typical today. I think you may have already said this, but sure. When looking at the daily RSI, we hit the 30 line. Don't you think it's necessary to at least test 50 RSI before possibly going down? We haven't yet.
Yeah, that's a great question. And I would say yes, except for the fact that you got the overhang of the weekly. If the weekly was down much closer to the 30 line, I would say that's a real possibility. But it is not necessary at all for shorter time frames to bounce off of oversold. I think we'll see the shorter time frames down at 25 or even 20 or 15 before this thing is over, whereas the weekly and certainly the monthly will struggle even to get down to 30, but I believe we will see that. Good question.
I think you did answer this, but how did you come up with the 5% as your target for the short-term moves?
Yeah, happenstance, because I pulled it off of what we were doing in the stock market 15 years ago. I mentioned this in our last broadcast, but to me it's fairly interesting, so I'm going to say it again. We had a group of 12 people made up of 3 senior portfolio managers, 3 portfolio managers, and 4 assistant portfolio managers and a couple of research assistants that met every Thursday for 10 years in what we called a strategy session, in which we spent between 4 and 5 hours looking at the overall indexes, every index around the world, but all of about 25 different indexes in the United States. And then we would break the main indexes down into their sectors, the 10 basic sectors of energy and finance and utilities and consumer durables and consumer staples. And then we would break each of those down into the actual largest companies in each of those sectors. And then we would assign each one of the people around the table to take 2.5% to 3% positions in those stocks, and then every week report on that. And so we would review all of that on a weekly basis. And at the end of all of that number crunching and disagreeing with each other and looking at technical and fundamental things and all the earnings and everything else, we would end the meeting by me saying, okay, we're going to now vote on the next 5% move of the S&P 500. Now, that's not a time-based thing. It's a dollar-based thing. 5% move, you can go for months and months and months and months and months without a 5% move. Or you can do it in 2 days. And the same thing with Bitcoin. When I say a 5% move, that has nothing to do with that short-term trading daily that I have. When I say that something, my belief is the probability is a 5% move up in Bitcoin. My short term is going to go from neutral to positive. That doesn't mean it's going to happen tomorrow or the next day or the next day. It means that the weight of the evidence, fundamental and technical, that I see on a short-term basis is saying that the line of least resistance is up, and I see no resistance within 5% of the day that I make that call. Now, what we were doing back then is we knew we were going to meet every Thursday. So if we didn't get a 5% move during that following week, we would keep those same votes, keep a record of it, and who made the votes. And we held people accountable for being wrong and did nice things for them if they were right, particularly if they did it consistently, because then it teaches everybody else what systems are working at that time. But in any case, you can go for long periods of time without hitting that 5% number. So the specific question is, why 5% for Bitcoin? And the answer is because when Leah and I sat down and looked at the tweets I'd been making and trying to define for people short, intermediate, and long term, I noticed that I was making the switches between neutral and negative, negative and neutral, neutral and positive, positive back to neutral, on something that was a minimum of a 5% move. As I just said, we've had about 10 of those that we've made changes on in the last 2.5 months, and almost every one of them worked out correctly, but it turned out to be more than 5%. They were 8 to 10% kind of moves. For example, when we went from 8,200 up to 8,800, that's approximately an 8% move. When we went from 8,800 up to 10,000, my target was 10,200. We didn't hit 10,200. So besides giving you a short-term number, a short-term change in our short-term trend, I also give you a target, a dollar target. So there's two things going on there. One is the short-term trend I am saying is a 5% move, but the dollar target might be more than that. It will not be less, because I'm not going to change my short-term opinions on something less than 5%. But I might very well have 6 or 7 or 8 or 10%, but I will give you that number, and I have on every one of those trades for the last 2.5 months. So a lot more than you wanted to know, but I just wanted everybody to understand how I'm defining these things.
Great. A couple of interesting questions, actually. Thanks, guys and ladies. Maybe. So here's an interesting one. Okay, I'll read it as is. Do you think there's a slight correlation between the Euro USD and Bitcoin fiat trades? Question mark. When Euro USD went into oversold RSI, we saw a huge bump on Bitcoin fiat prices. People would, and here's the second question, people switching between fiat pairs, question mark.
Yeah, it's a great question. And yes, there is some sort of a correlation. It is not close. The closer correlation in my mind is between the dollar and gold. And there is another correlation. It's not perfect, but it will be, I believe it's sometime between gold and Bitcoin. So to me, gold and Bitcoin are the things to watch. Gold and the dollar is a separate thing to watch, but it is correlated to gold and Bitcoin. Bitcoin and the euros is a tertiary effect, in my mind, of those things that I just described. And that's because the dollar is so powerful relative to the euro and other currencies. Powerful simply meaning not going up against them, but powerful because the amount of it that is used in world trade compared to any other currency. So I don't think that's what you were looking at, but that's the way I've been reading it. And it is not very close. I will point out one other thing. There's been a bunch of people talking about this monthly cycle on daily charts based on the 6th of each month. Well, we are at the 7th of each month, and the 6th did not do anything. So that particular factor that I believe had gone on for 5 or 6 months came to an end as of yesterday, as do all of these type of things that appear to be correlative in some way. The best example of all is the Super Bowl indicator, which went for, I can't exactly remember the numbers, but I believe it was 24 years in a row at about an 85% correlation, that if it was the old league or the new league that won the Super Bowl, the market would be down or up for that entire year. It's fallen in disrepute over the last number of years because so many of the teams, it's even hard to tell where they came from and what they are and that sort of thing. But all of these things that look interesting might be for a period of time, but just never hang your hat on any of them. I've been watching this thing for the 6th, and I was getting a little bit nervous being in a neutral position as yesterday came and went, but nothing happened. So I think that's dead for now.
Mr. Tyler, you want to, obviously we discussed pretty at length this morning on Tone's Bitcoin morning brief about Clayton's statements that came out yesterday, which obviously I think and we think is a pretty big deal. Do you want to just make a comment? I mean, you and I haven't talked, I've been on this silly yacht all day, but also for everybody, just your thoughts on what the statement means and just in general.
Yeah, I think it is one of the most important things that has happened in the last 3 or 4 years. What it means and what it will do to prices is anybody's guess. But at least we know what the game is now. You know, everybody was wondering, what are we doing? Are we playing blackjack? Are we playing Texas Hold'em? Are we playing roulette? What the heck is going on? And nobody had an answer. Now we know exactly what the game is by the regulators. He was crystal clear. ICOs are securities that doesn't say what they're going to do about it. Bitcoin is not a security that does not say what they are going to do about it. But that is 90% of the battle. I was greatly relieved to see that. I will speculate that what it means is they are going to come down hard on many, but not all of the ICOs. And what that means is they could very well reduce the number of ICOs that is pushing 2,000 by 3/4, down to 500 or 400, almost in a 30-day period of time. Not because they force them out of business, because nobody will touch them, because the liabilities are going to be enormous, a lot more than any of them have any kind of backing to be able to pay. It could end up being bad for Bitcoin prices. It could mean that that will be what it takes to complete the hyperwave, because it will cause such a disruption in the ecosystem that what we thought was fog and smoke for the last couple of years, where it was just almost impossible to tell what was going on, is now going to be black smoke everywhere. You won't be able to see the person next to you. It will be so confusing. Institutions won't know which way to go. Some of the institutions that have taken the step of adding 9 altcoins along with Bitcoin to their exchanges, and various fund managers that are talking about adding a 3rd or a 4th or a 5th besides Bitcoin, all of a sudden are going to be staring down the barrel of a tremendous regulatory gun. And I don't know how it's going to come out, but I do understand why the market has been frozen for the last 2.5 months, going sideways as they've been contemplating this. So they've played their cards. They've gone after a couple of very low-hanging, easy targets that they aren't charging them with securities fraud. They're charging them with fraud, which is a different thing. But I think we will, if I had to guess, in the next 30 or 60 days, we are going to see a lot of activity. And it is not going to be bullish for the ecosystem.
Tyler, my own just probing at you a little bit while we're hitting 10:10 p.m. I know that you were excited this morning when I sent you the Susquehanna announcement that they had been trading for the past couple of years, kind of in stealth mode, that obviously that they're very excited about the futures, etc. We've been following and talking ourselves about all the moves with Goldman Sachs, other institutional investors, etc. But on Hyperwave, we haven't discussed it. I haven't asked you. I asked Tone and the boys enough. So let me shoot it back over to you today to potentially end it with, which is just simply, what did you think about the stories today and what's going on with Susquehanna, which is an incredible and very powerful firm, and that they are very much trading Bitcoin?
Yeah, it's interesting. I've got a unusual perspective on other money managers, because for 20 years what I did is I visited all of them and studied what they did and what their performance was and how they made their decisions. I did that because almost all of these, all the money managers run mutual funds, and most of them run ETFs now. And before, back in the 1980s, 1985 to 1991, I had a research firm that I had founded that only did one thing: studied mutual fund management in order to be able to sort who were the good ones and the bad ones. Lipper and Morningstar, Morningstar started about the same time. Lipper had been doing it for years before that, only looking at one thing: performance. Whoever did the best performance got the highest grades. And to me, that doesn't make any sense, because each manager has a different technique that is not trying to maximize returns. What most managers, particularly the really good ones, do is they attempt to get the highest risk-adjusted returns. And we won't go into that. We'll do it in a different show. But risk-adjusted returns don't mean the most money in a year. Usually the people that make the most money in a year are taking tremendous risk. And what will happen to them is, in the next down cycle, they will lose a lot more than everybody else does. Whereas risk-adjusted returns are adjusted both up and down. So I visited regularly about 300 different management companies all over the country. And I would sit down with the chief investment officer, the portfolio managers, the chief investment officer for fixed income equity. We'd all sit around and I would ask them a million questions. Do they use technical analysis, fundamental? If it's fundamental, are they growth? Are they value? If it's value, is it value growth with value? And on and on and on. And then, how are you guys compensated? Are you compensated for beating an index? Are you compensated for beating other people trying to do the same thing? And you get a clear picture of who's strong and who's weak. And I began publishing a thing called the Fund Family Performance Index that ranked them all from the worst to the best. And an awful lot of companies that ended up being called the best over various time periods used that research as advertising, obviously. But the ones that were at the bottom would either try to sue us or just write letters to the editor. And, you know, these guys don't know what they're talking about. But through that 6-year process, I got a very clear picture. That's a long answer, but when you name someone like Susquehanna, and I could give you 50 other places that if they had come out and said, we have decided that we are interested in crypto and we're very interested in Bitcoin, and we didn't make it public, but we've been doing it for 2 or 3 years. That's what Susquehanna basically said. I think they're one of the best in terms of what they do and how they do it on an investment level, investment management level. So I was very excited when I saw that, because that tells me that the maximalist view of the long term is being readily accepted now, slowly, but readily accepted by very smart money managers. And you could not say that until 3, 4, 5, 6 months ago. There have been a number of hedge funds that have gotten into them, but you don't really know what they're doing. Are they short? Are they long? They see opportunity. That's different. Anything that's volatile, you will find in a hedge fund. That's very different than what I'm talking about, which is looking for an asset class, understanding that asset class, and understanding enough about it that you're willing to put your clients into it under a fiduciary responsibility. Well, plenty of people are willing to do that. You know, just look at the Wolf of Wall Street. There's more people and companies and institutions that'll put anybody into anything than there are the really good ones that know what they're doing. This is one of the really good ones. I was glad to see it. Even more so than Goldman. Goldman obviously is right up there with everyone else that I consider in the top. However, they are basically a trading firm for their own proprietary trading. That's different than being basically a fiduciary for others where you take responsibility over their money. Goldman's got plenty of that also, but they've got this other aspect. And all the bigger firms do. But anyway, I was very pleased to see this. And I will point out every time one of these stories comes in my reaction to it on the basis that I just described.
Perfect. Thanks, Ty. Yeah, I think if everybody allows me, maybe I'll throw some your way when we do, especially our longer videos, just regarding any of the cool news stories as well that we talk about in the show, and hear your take, which would be good fun. So
Great.
With that said, I think we are going to end, unless you have any last thoughts.
No, I don't. Thank you very much for tuning in so late on a Stanley Cup Finals night.
Hello. Okay, the Caps are gonna go Caps.
Yeah. Okay. Thanks, everybody.
Okay, bye.